Welcome back to the Dividend Diplomats YouTube channel over in Lanny, Bert, the Dividend Diplomats. Right now, we are going to talk to you about a stock that is yielding over 8% and is a hot button stock in the dividend growth community.
Before we jump into this 8% yielding dividend stock, high flying, wild and profiling, woo, buy this dividend stock, smash that subscribe button, give Bert and I a nice thumbs up. Bert, what stock is smoking for you right now?
Altria Group, ticker symbol MO. This company, I mean, it was only a matter of time until we started coming across this company and what is going on. But kudos to all of you in the community that keep talking about Altria on the Twitter feeds, on our YouTube comments, that keep saying we are buying, we are looking at Altria as the price continues to fall.
The price continues to tumble, even though Altria is only down less than 10% this year, far less than the S&P 500, which is down over 18%. When times get tough, people light up, people drink little alcohol as well, and that's where Altria Group usually stands to benefit. But Bert, we all know it. What was the big headline over the last week?
FDA was going to put out the SIGs for Altria Group, or should I say the JUULs, because the FDA is leaning towards a ban in July. They're tipping us off that it's going to be coming. They are going to force Altria to pull JUUL off the shelves in the US, allegedly. It's not guaranteed yet, but they're warning you that it's coming down the road. So obviously with that, considering Altria is pretty domestic focused, as we all know, after they split from Philip Morris and Philip Morris went the international route, Altria went the domestic route. This would be a major hit to the company's future revenue.
Well, we already know that they've probably written that thing down so low over the last few years. I wonder how much is left. But you're right. Luckily for shareholders, there's actually a current temporary hold on the ban, so they can continue to sell the e-cigs right now as the court system still tries to figure this one out.
So to answer your question, Lanny, I think Altria went to the AT&T school of acquisitions here, or investments, because it is, to your point, they have written down that JUUL investment significantly. What was it, in 2018, as we're reading here from the notes? They invested $13 billion to take a 35% stake in JUUL. And yeah, Lanny, write down as an understatement. As of March 31st in their financials, the estimated fair value of that investment has dropped from the $13 billion investment that they made a few years ago to $1.6 billion.
That's how you set yourself up for right now. And on top of that, guys, though, again, the stock price, because of the news, did drop about 6 to 8% throughout the week. Most stocks actually went up on Friday, and I think Altria was included in that. But they came out with some pretty good guidance, during the most recent financial discussion, Bert, if you wanted to cover some of that.
Yeah, they actually had a pretty solid earnings release. I think that's always the thing about Altria Group that stands out, despite the noise that's going on with JUUL, yeah, it's that time of night, everybody. I can barely talk here. No, I'm kidding. The numbers look great. Revenue still crushing it. That first quarter revenue that was reported was 5.8 billion. So they're still making a lot of money, even though it was down slightly compared to the same quarter in the previous year. It was down, 2.4%. Earnings, they're still crushing at earnings. Diluted EPS were $1.08, an increase compared to the last year. So yeah, I mean, the numbers look great. And Lanny, to your point, the guidance, let's talk about their guidance here. They reaffirmed it. Guidance between $4.79 and $4.93 per share per that last earnings release.
Guys, there you have it. Decent earnings released, reaffirming guidance. Again, the key piece here is that they're expecting, EPS in that range, of 479 to 493. But analysts, are also expecting about $5.11 per Yahoo Finance. pretty interesting here because that's obviously a lot of optimism from the analyst. Even if, we were to use, the expectations from Altria themselves, things still do look okay. The other thing that I do want to state, Bert, is that Altria is, there's a lot of stock and many dividend investors. So now they're getting all these headwinds. I know you even mentioned earlier in a conversation that, the Biden administration was looking to reduce the nicotine. They've got obviously the battle right now on the JUUL, but they did make a strategic investment in a beverage company, didn't they?
Yeah, they are slamming Natty Ices there at the Altria Group headquarters. They got Natty Ices, they got Natty Daddies, they got Natty Whites. We're kidding. They have an investment in Budweiser there. But to your point, they're moving a lot, Lanny, too. I mean, they're in the beer business, but wine, not so much. And I know you as an Italian wine drinker yourself, Lanny. I don't know how you feel about that one necessarily.
Hey, you take it easy there. That's okay. There's plenty of other, wine companies out there. But I mean, this dividend stock has grown their dividend for over 12 plus years. So when we dive through the dividend diplomat stock metrics that are focused on these three, the price to earnings ratio less than the S&P 500, the payout ratio preferably less than 60%. We'll get into that. And then three, a history of growing their dividend. Altria makes a pretty compelling case right now, as well as when we look at the dividend yield that again has swelled up to over 8%. I mean, there are a lot of passive income investors are probably peeking in on this video right now.
That's right. So let's jump right in. Their current price at the time we're recording this video is 43.40. To our point, we said the Yahoo analysts are using $5.11 EPS. That gives you a PE ratio of 8.49. But heck, Lanny, to your point, let's use the most conservative of management's range of $4.79 too. It's not that far off. The PE ratio when you use that is a blistering 9.
Exactly. It's, very low comparative to Philip Morris and other tobacco players. Obviously lower than the S&P 500, which currently trades at about 20 times earnings. And we'll segue that into that dividend payout ratio because I think investors, we've read the tweets, we've read the articles. Is Altria's dividend safe with a potential JUUL ban? And guys, with what the analysts are expecting, with what management's expecting, with them currently paying a 90 cents per share per quarter or $3.60 per year, the dividend payout ratio is in the range of 70 to 75% right now, depending on the guidance range that we just brought in.
Yeah, so it's obviously higher than the 60% threshold. And this is why we use a threshold to keep an eye on the payout ratio to assess that dividend safe. Obviously, you cannot pay out more than you earn in the long run. That is just not sustainable. 75% means that they're creeping up close to 100 to where their earnings may not cover the dividends into the future. To your point, Lanny, they pay a $3.60 annual dividend using that 479. That means for JUUL earnings and issues that may come up from there, that gives them a $1.19 buffer there between what they currently pay in the dividend and their earnings. So that's still plenty of room. I mean, if earnings are going to fall that much from the investment, we might have a different conversation, and we'll be talking about it in a video at a later date.
And like you just said, that's commonly where they're at. They're always on the higher side of the payout ratio. The one part is it's always surprising how strong that dividend growth rate is for such a high yielding, high payout ratio company. So guys, getting into that third dividend stock metric, dividend growth, again, since they've spun off, they've grown their dividend every year. Financial crisis, whatever. The pandemic, bring it. Guys, they're still going to be bringing these dividend increases. So keep glued to the press releases in this upcoming quarter because we should expect a nice increase from Altria. But they've been doing it at an average rate of over 8%, guys, which again is not easy to do when you're yielding this high with that high of a payout ratio.
That was a testament to how much they've been able to continue growing earnings over the years too, especially with the high payout ratio. the fact that they're able to sustain high single digit dividend growth in a sector that typically doesn't have it is actually pretty great. That's why people love Altria Group.
Now, granted, their last increase was just under 5%, still coming out of the pandemic back in 2021. To give you guys a little bit of flavor, during the year of the pandemic was only 2.4%. So 2.4% in 2020, pretty much double that in 2021, trying to probably get back to what they're usually doing. So we'll have to see if JUUL has any impact on that future dividend increase again later this year, more than likely towards the end of either July or August.
So let's talk about that bonus metric, the dividend yield. We've already teased it. It's high. Their dividend yield is 8.29%. So what does that mean? $100 investment pays you $8.29 of an annual dividend. That would get you about 0.2 shares if you drift it here at their current share prices.
Pretty impressive. I mean, guys, it's about what, 6 times the S&P 500 right now. Obviously a higher risk, definitely a sin stock for those other investors out there. So you're definitely getting paid for taking on the risk of a taboo stock here, with obviously the nicotine, the addiction, tobacco, you name it. I mean, it's not your Johnson and Johnson, dividend stock here.
And let's say there are plenty of people that won't touch the tobacco companies for that reason. And we completely get that too. You have to be comfortable with what's going into your portfolio, what you own, what you invest in. So if you're going to say in the comment section, you don't want to touch Altria Group because they are a sin stock and because they're a tobacco company, everybody, we get that. And that's your decision. By all means, look, there are plenty of other great undervalued dividend stocks.
And so, Bert, kind of to round it out here again, we're looking at a PE ratio of around 9, a dividend payout ratio roughly between 70 to 75%. As long as you can for a company to have a dividend growth streak, again, being public, less than 12, 13 years. So they've been doing it every single year at an average rate of 8%, with a dividend yield also over 8% here.
It's insane. So what am I doing with Altria Group? I don't know right now. I'm going to keep watching it. I don't know. I mean, you obviously get, from a dividend income and a dividend yield perspective, you clearly get a bang for your buck here. With that, there aren't too many companies that have 8% dividend, but I want to keep an eye on what's going to keep happening with the JUUL investment, what the full impact it's going to be to earnings here, because ultimately that's going to be a big driver for Altria Group. I own Philip Morris, so I have some tobacco exposure already. So I'm not running to get more, but it's definitely interesting, and the metrics are too hard to ignore from a dividend investing standpoint. What are you thinking, Lanny?
Again, I'm in kind of similar shoes here. I own a ton of Philip Morris. Guys, check the link in the description so you can actually see full transparency, the dividend stock portfolio, so you can see how much we own of each dividend stock in our portfolio. I'm just scrolling through my my list right now, Bert, and I own over 100 shares of Philip Morris, so pretty strong position. In PM, probably I'm going to stay on the sidelines with Altria, but those that own, what a great time to drip. If you're looking to get into tobacco and you really want to stick to domestic, obviously build your foundation, probably stick to some higher qualities. But if you've already have that established, Altria is not a bad stock to possibly consider grabbing a few shares.
Yeah, I mean, you can do something similar to what you've done with Scott's Miracle-Gro, what we've done with plenty of other positions where we bought some legacy stocks in our portfolio that have fallen from where we bought them several years ago. You can add a share here or there just to keep going and keep lowering that cost basis, or keep building your position if you own it. That's never a bad strategy.
No, and guys, I think the question here is, what are you doing with Altria stock? Leave it in the comments here. We want to see who's buying, who's selling, who's holding. Please let us know. Is this a great passive income producing dividend stock for your portfolio? Give your boys a holler.
If you haven't already, subscribe to that channel. Give this video that thumbs up. Check out the swag store. Let us know what you think about Altria, the other companies we've been buying. And guys, let's just keep pushing towards financial freedom.
Guys, that was Bertha Hart and Lanny from the Dividend Diplomats. Over and out.